QuickBooks Online 2025, entering billable expenses and time, adding then those billable items to invoices, invoices being compared and contrasted for sub-customers, otherwise known as jobs, versus projects. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 Project 5. We set up in a prior presentation opening the major financial statement reports located on the left-hand side. We're in the standard reports area, the favorites section, right-clicking on the balance sheet to open a link in a new tab, right-clicking on the profit and loss to open a link in a new tab. Let's tab to the middle so we can close the hamburger, being in the modern mode of the reports, selecting the drop down, and we want to see the custom dates, changing the range from 010125 tab, 013125 tab. It's going to refresh automatically. If it doesn't, you got the trusty refresh button over here. Tabbing to the right, closing the hamburger, changing the range again, going up top for the custom date tab, 010125 tab, 013125 tab. Once again, it's refreshing automatically. So last time we talked about entering time for employees, not necessarily to process the payroll, but so that we can then turn around and bill the client based on that time entry. We have a similar concept that we've touched on in the past, but want to look at in more detail here, that being that we have customer supplies that we be purchasing for a particular customer or job, in which case we can make those items billable. So we have a similar functionality. This would be, if I go to the first tab, similar if we're in like a job cost system, meaning if I go into the sales area and into the customers, closing the hamburger, we might set up a separate job if we're using this kind of system, because we're using basically a job cost system, and then apply out the expenses that we are consuming for a particular job to a particular job so we can bill a customer based on it. Or if you're in a more advanced system, then I'm going to open up the hamburger. You might use the projects once again for a similar kind of system, the projects being tied to in the similar way as the jobs or sub-customers to a particular customer, and we can assign them to the jobs. The jobs the projects, which give us a little bit more detail on their own kind of area to track the reports and whatnot, as well as more sophistication with regards to typically like applying out payroll. So now we want to apply a bill to these jobs. So how can we do that? First of all, let's give a recap of how this works. If I hit the plus button up top and we go into the account and settings, then I want to go into the expenses tab on the left-hand side. And within this system, we had turned on in the past, make expenses items billable. So that means that we can basically, if I'm doing a project for a particular customer, I might have multiple projects for one customer. That's why we would create a project or job. And then within that project or job, I'm going to populate the expenses for that project or job, possibly as I actually buy them. And that means that when I make the purchase form, a check or an expense form typically, I can make the item billable, pulling it into then an invoice so I can invoice the client based on what I purchased for that client. So within this billable item, you've got this markup. That would mean that if I paid $100 for basically supplies, I pull it into the invoice. Do I want to pull it in at cost, $100, or do I want to have some systematic markup? I tend to like the idea of having it pull in at cost, and then I take the entire job and then calculate the markup as a separate line item. I think that's a more transparent way to do it, but you can mark up every line item at some standard rate if you wanted to as well. So then we have the track billable expenses and items as income. This is the problem with the billable functionality. So normally when I pull something into an invoice, I do that with an item. And the item is going to give us a lot of leeway in terms of what account we want to impact. Now we know it's going to impact an income account if we enter an invoice usually, but we might have multiple income accounts that we want to be assigning it to. How do we do that on an invoice? We do that by assigning it with the item. if you're pulling something in from an expense form, the expense form is just calling it billable. It doesn't have an item directing the income account that it wants to be hitting. So that's kind of one of the problems with this billable component. The other problem with the billable component is if you use it for inventory, it doesn't always catch the cost versus the revenue as you pull it into the invoice. We talked about that a little bit in a prior presentation when we used it for the invoicing process. So now we're using it more in where its element is, and that's going to be in this job costing system, but we still have this income kind of problem. Now it says track billable expenses as income. So we could do it in a single account, or we can track it in multiple accounts. And if we track it in multiple accounts, you can add a use for billable expenses checkbox to accounts edit screen. This is kind of like the workaround that might allow you a little bit more functionality to use this system and apply it to multiple accounts. However, it's going to take a little bit more of the data input. So this is the workaround instead of using supplies. Most people, I think, are possibly going to use, the single account because it's a little bit easier. Note that this is checked off by default. If this isn't checked off as it used to be when they first put this into play, then I used to have clients that didn't have this checked off, and I want to show you the problem that happens with it. And the problem is that it pulls it into the invoice, but then assigns it to the expense account instead of the income account. And because this is confusing a lot of times to people, I want to give an idea of what this problem looks like, and this will also help us to determine what is actually happening here with these billable items. So let's check that off for now and see what happens. So I'm going to hit the save button, and we're going to say done and close that out. And then I'm going to enter an expense form. So I'm going to hit the plus button, expense form, a normal form similar to a check form that we would use. I'm going to put it in Office Depot, let's say. We've already got that one set up. It's coming out of the checking account on 01/30/25, let's say. And we're going to tab through it here. Now it's trying to remember what we did last time. And this time I don't want to buy equipment. That's kind of the problem of having one vendor for multiple things that we purchase. I'm going to change this then to supplies. So we had supplies, and I'm just going to use the general supplies expense that we've been reporting to. I'm going to delete those sub accounts most likely in the future. I'm going to say it was for $130, and then I'm going to make it billable. And then we could say it's going to be taxable. That doesn't mean we're paying tax on it now in the expense form. That would mean that as I pull it into the invoice, it's going to be subject to sales tax, a type of consumption tax. If I make it billable, I have to assign it to a customer. This time I'm going to assign it to project 2, Sam the Guitar Man, project number 2. Okay, so this is the expense form. What's it going to do? Decrease the checking account by 130. The other side's going to go to the expense of supplies, and it's going to be billable, meaning it's going to go into those billable items that I will be able to track within the customer section for Sam the Guitar Man and or in the project area, and then create an invoice that will pull it into the invoice. All right, let's save and close that. Check it out. I'll go to the balance sheet, refresh it. If I go into the checking account, boom. Checking out the checking, we can see down below, where did it go, yo? We have the expense form right here for the 130 to supplies. Okay, let's go back. Let's go to the P to the L to the profit and loss, refresh it. So we work with fresh stuff. I don't work with moldy bread. I don't eat moldy bread. I don't work with moldy reports. Let's go into the supplies here. I know I'm picky. It's just like Homer Simpson used to say when someone served him drinking water. If it's brown, drink it down. If it's black, give it back. Because we're picky around here. Brown water is, that always correct me. Brown water, okay, but if I can't see through it, then I am not going to drink that. Anyways, let's go back. We can see this now if I go to the first tab. In the projects, we assigned it to project number 2. So if I go into the projects over here for numero 2, and we looked at now the time charge area. So that's going to be in this one. On the transactions, we see that the time charge is here, or here's, I'm sorry, the transactions, here's the expenses. Okay, and then I could also go to the sales, and then I can go into the customers, closing the hamburger, and look at the unbilled income. And so then within Sam the Guitar Man, because this is the parent that is being billed for the project that we assigned to, we see once again, notice it took me back over to the projects area in order to see it as a sub-customer, Sam the Guitar Man. So here it is here. All right, then I'm going to turn around and make an invoice. I'm going to invoice for some billable time that we entered in a prior transaction, as well as the billable expenses. So we have two items that we pulled through using this kind of billable functionality, one being the time, one being the expense, that I can apply to the same invoice. I could invoice with the plus button up top, or I can invoice within the project here. So I'm within the project, and then I'm going to add the invoice. And so now we're invoicing, and we have on the side, it wants to pull in these two items, 800 for the time we entered in a prior presentation and 130 for the billable expense. So I'm going to add, I could just add all of them. I can save myself a click. Let's do that. And then if I tab through this, we're going to go, okay, let's make this 130.25. Okay, that's good. And then down below, let's see where it put this to. So notice what it did here is it pulled in the time, and it used the actual item in order to assign out the time. So that looks great. It's going to go to the income account that we assigned it to because we set up an item for it. But notice it didn't populate anything here for the invoice. It just didn't put an account here. Now, if we don't do anything to it and we just pull it in, what it might do, what it used to do, unless they kind of adjust it at this point in time, is decrease the expense account instead of recording it as an income account. Now, I've done taxes where people have set up their whole system where this is what is happening, and it becomes a problem when you try to do the taxes. So I'm going to try to record it to just show you that problem. So in other words, this one, although it might have come through payroll, we might have been paying our employee, we're not going to record it as a reimbursement to payroll expense. We're not going to decrease the expense. We're going to record it to income for service income. This one pulled in because we bought supplies specifically for a client. Now you might think, well, if I bought supplies for a client and then I'm invoicing for those supplies, what should happen is I was reimbursed for what I spent on the client, and therefore I should decrease the expense account because I didn't really pay for it. The client paid for it. So you can think it's going to impact the net income in the same way, but that's not what you want to do because what we're doing on the invoice is trying to come up to the sales price. What we want on the income statement is revenue minus expenses. It's true that we had to cover our costs in order to make net income to get a profit, but we don't record it on the income statement as a decrease to the expense account, even though I'm putting the line item that I actually paid on the invoice, because what's going to happen there is that we'll have no expenses on the income statement, right? The expense will just read 0 because I was reimbursed on it. That's not what the IRS wants on the tax return. They want income minus the expenses. So let's see if I can just record this and see what happens. I'm assuming what's going to happen is it's going to increase the accounts receivable by the full amount, 930. That's going to be applied to that particular project. And then it's going to record the other side to revenue, 800 to the service item that's driven here. But it might put this 130 as a negative to the expense account instead of a positive to income is what I'm thinking might happen. So let's go ahead and save it and close it and see if that is indeed the case. So let's go to the balance sheet and we'll run it to refresh it. We want some fresh reports. And so we're going to say in the accounts receivable, the A to the R, we got the 930, so that looks right. Going back, go to the income statement, run it to refresh it, and then we're going to say in the services, let's go into the services, and we see here that we have the 800, and the other side is not there, right, that we did for the supplies. So let's go back, and then in the supplies, if I go into the supplies now, what did it do? it decreased the supplies. So that's the problem. That will bring supplies down to zero. Now you might say, hey, look, and again, I've had clients like argue with me on this, so that's why I'm trying to lay it out. You might end up yourself thinking this way or talking to a client that's like, hey, look, I'm being reimbursed for the 130. I didn't pay for it. The client paid for it. I just bought it first and then the client reimbursed me. So this should be zero. And again, it's the net impact on net income. That's true, but that's not how we do the income statement typically. What do we want to do? We want to record the revenue, which includes what we had to charge in order to cover the costs that we spent on the job. And then we subtract out the expenses, right? So instead of this being a negative expense, it should be income. And the general rule is all income accounts only go in one direction. So meaning expenses only go up in the credit direction, basically, or I'm sorry, in the debit direction. They only go up as expenses, and then the income generally only goes up as income. So it's like you're driving a car. The odometer in Ferris Bueller's Day Off, he tried to put the car in reverse and try to reduce the number of items on the odometer, and it didn't work, right? Because the odometer only goes one way. It goes up unless you reset it, which in our case, we do that at the end of the period. So income only goes up typically. Expenses only go up. And then you take income minus expenses. The only time they go down is when you reset the odometer, when you close it out, which happens in QuickBooks at the end of the year. All right, let's try it again, and let's adjust the settings. So I'm going to go to the first tab. I'm going to adjust the settings, go into the cog up top and go into account and settings. Then I'm in the expenses area. I'm going to go into the expenses, and this time I'm going to do what's normally the default, track billable expenses and items to an income account. I'm just going to put it to a single income account. So that means that every time I use this, I can't really decide which income account I'm going to go to. You can test out this one if you wanted to pick each income account without using actual items, but that's going to take a little bit more data input. This would be the easiest thing to do. It's just going to assign it to a default income account. So let's save it. And so, okay. Now you might ask, which income account is it going to go to? If you go to the advanced tab, for some reason they put it over here, and you go into the chart of accounts, boom, then it's going to have this billable expense income, which kind of ties out. And so I can assign it to this income account. So in other words, I could put it directly into like any income account I want, but I only have one that I could put it into. By default, it's made its own income account, which is in this default general ledger. So if you don't have this account, you can assign it to some other account, but it's called billable expense account at this time. So that's where it's going to go. So let's go ahead and say done, and let's try this again. So I'm going to go into the plus button. Let's make another expense form. This time we're going to say it's going to go to the, let's do Office Depot again. Office Depot that we're paying, and 130. Okay, let's make it 131 to see if I can get it like at the end. And then we'll say it's going to be for supplies. I'm going to put a description this time of supplies because I would like the description to pull into the invoice when I pull it in. So then we're going to say instead of 130, let's switch it up and make it 200. Let's make it. And then this time I'm going to make it billable, and then but this time I'm going to choose it to be 3005. This time looking and practicing a sub customer, which is equivalent to a job instead of using a project. But similar concept is happening here. And so what is this going to do? It's going to decrease the checking account by the 200 as we would expect. And then the other side is going to go to supplies. And then I'm going to be able to go into the sub customer this time and create an invoice from the billable item. But this time when it pulls into the invoice, hopefully it'll give me a description as it pulls in, which will be great. And hopefully then it will assign it not to a negative expense account when we record it, but a positive income account. All right, let's save it and close it, and then we'll check this out. So let's go to the balance sheet, refresh it, give me something fresh here. It doesn't need to be perfect, just something that's not stale. I won't want to break my teeth on it. And then we're going to go down and say it's 200. Okay. And then we'll go back. I'm not a perfectionist. It doesn't need to be perfect, but for crying out loud, I don't want to have to use it. If I could use it as a doorstop, I'm not eating it. Okay. I have standards. And then we're going to go down and say in supplies, we're going to go down here in supplies, and then there's the 200. Okay. Let's go back again. All right, so now let's go to the first tab. This time, instead of going to the projects, because I put it into a sub-customer, it's going to be in the customers area. So it's under sales, closing the ham boogie, under customers, and then we have the unbilled income at the 200. Let's go into that. And so here's our unbilled item. So I can go in, I can start the invoice from here, or I can create another invoice and then pull it in that way. Let's go ahead and start the invoice from here. It pulls in automatically, right? Or I can do it this way, closing this out, save and leave without saving, plus button up top, invoice, and this is going to be for job 3005, I believe it was, sub-customer, and then boom, billable item. We add it for the 200, okay, and then close that because that's bothering me. And then, okay, and then 131, all right. And then down here, notice it didn't put a project in again. And I think this is basically, this is QuickBooks. And why didn't it put a product or service? Because the billable items don't have the capacity to add the product or service. It's just gonna assign it to the expense account. So if I record it just like this, it'll still let me record it because QuickBooks has by default said it's gonna go to that billable income account. But I think QuickBooks is also saying, hey, you could change it if you wanted to. So that's kind of nice. So if you wanted to pull it in this way, and then based on the description, assign it to an appropriate product, then possibly you can do that. But if you do that, like if I add a product here, what's gonna happen? It's usually gonna change the amount. So that's a problem. You might set up, a product that doesn't have a rate to it, so that you can assign whatever rate pulls in if you wanted to do that, because the product would then allow you to give maybe more flexibility in terms of what income account to go to, right? But by default, it's going to go into that expense account. So here's the 200. What's this going to do? It's an invoice. It's going to increase accounts receivable by 200. The subledger is going to be impacted for the customer account, and the other side is going to go this time not to decrease an expense, but rather to an income account, which we gave that default account billable income. All right, let's see if that happens. Save it and close it. See if that's what happens. Que paso? Let's go to the middle tab, run it to refresh it. And then we're gonna say in the accounts receivable, we have then the 200 and the other side went to billable expense income, all right? Let's go back. Let's go into the next tab, run it to refresh it. So this time it made a new account called billable expense income. So that's great. Instead of going into services. Now, if we wanted all of it to go into services, we could have just assigned the default account to services, and that's okay. It would put it right into there and that would work. So I'm gonna go into here, and there, of course, is our 200, boom. Let's go back. Now, one other issue with this one is that if I wanted to run a subsidiary report by income, which usually breaks it out by item, then you would think this might cause that a little bit of problems. In other words, I might want to look at my income account and say, let me break this out by item. And usually I go over here and say, okay, if I wanted to do that, I would go into my reports, close up the ham boogie, and then we'd go into sales customers, and we've got income by customer, we've got income by customer summary, sales by stores, sales by store, product service, sales by product service item. Let's open that one, right click and open up, boom. And so let's see what we got, closing up the ham boogie. And we want to do it for custom dates going from 01/01/25 to 01/31/25. And so there we have it. So here's the total is coming out to 53,987, whereas on the income statement we have 53,857, right? And that's because now these two should tie out. Why doesn't it tie out? Well, we're missing the income. We assigned something to this income account without assigning an item, because we bypassed the assignment of the item by assigning it by using the billable thing, which recorded it directly to the account, which throws off the subledger, right? So that's something that might not matter to you, but just something to be aware of. Now, how can you get around that? You could set up items that have no rates to them, right? You set up an item that assigns it to a particular account with no rate, and then when you pull the information into the invoice, you can assign the item at that time, so it'll pull in the correct amount, and then you can assign the item, which will assign it to the proper account, and the item then will pull up and show up in the subledger. If you wanted to kind of think about that, just something to keep in mind. So let me show you a little bit of what I mean. Like, there's a couple ways that we can try to get an item into this system. One is to bypass the billable expense altogether, and the other is to set up an item that doesn't have any cost to it. So let me show you. If I go to the first tab, one way we could do this is we can say, okay, if I hit the plus button up top and we go in to make another expense, I won't record this, but just to give you an idea. And let's say this was going to Office Depot again. And instead of putting it in the category, one way we could get around this is to say, I want to use items instead of making this part billable. I'm going to delete it from here. And if I use items, then I can make an item for supplies that I'm purchasing. And the items is usually for purchasing inventory, but I'm going to use the items to purchase the supplies. And I'm going to add it here. I'm going to add it so I can add a new item. So it's going to be supplies. And then I sell this service to my customers, the supplies. And then I'm not going to put a rate here, is going to be the idea. And then and the income account, now I can assign it to the income account I want to assign. So when I pull it into the invoice, it will properly assign it to the proper income account. And then there's no purchasing item. So and then I want the sales tax to be, I'm just going to say no sales tax because it'll be a service item for us. So let's save it. And then, so now it pulls in as supplies, and then it didn't put a rate in it. So then I can put the 200, and then I can make it billable, right? And then I can assign it to a customer or whatever. And that'll pull it in. And then when it pulls in, hopefully it will recognize, and we know it does because we did this with the inventory, it will recognize the item and put it to the proper account. Now, what's the downside of using this strategy? The downside is if you use bank feeds, that's usually what people use to record transactions, and it's a little bit more difficult to enter items when you're using bank feeds. So if it was an electronic transfer and it comes through the bank feeds, it's easier to just assign it to an account and possibly assign it to a customer that way. So I'm not going to record this. I'm going to close this out. Notice cancel transaction. Do you want to leave without saving? I do want to leave without saving. If I pulled something into an invoice, let's say I made something billable and I pulled it into the invoice, then remember the amount's going to show up here, and then it automatically goes to the default account, which is billable, but I still could assign a product or service. So if I set up that supplies account, that supplies one, then notice as I pull that in, hopefully it doesn't overwrite the rate because the rate was 0. So if there was 200 in here, the other way you could do it is I could pull the billable item into the invoice and then just based on the description of supplies, add the item not having an amount in it. So I can just use the amount that pulled in, but then assign the item at this point so that I have the item for the subledger reports. So every time I hit an income account, there's also a product or service allowing me to create a subledger report breaking out all income by product or service. Otherwise, the subledger won't tie out to the income on the income statement. Okay, so just a quick recap here that I'm going to close this out without saving it, leave without saving. And then if I go into the plus button here, so now we have the two areas that we can track products or jobs. We can either do it by project. If we have that turned on, we can go into the project and we can see the information which has now been pulled in to the income because we charged for things that we did. And so there's going to be that item pulling in here, or we can do it and track it by the sub-customers, which are under the sales tab and under the customers. And then we assign it out to the sub-customers, which used to be called jobs. And then when we create our reports, you might look for a report that's for projects, meaning internally you've got these reports in the projects area, and you can look at each project individually to run, profit and loss reports for a particular project. And then when I go into the revenue account over here, revenue income statement, I could then display it selecting the drop down by customer. So if I give this by customer, you can see then it's giving me the sub job up here, and then also the sub project. So here's the the sub project for each of them. So this is a way for us to kind of list out all of the projects and basically customers in this long detailed report, which is one thing you might do like in a job cost system, which again we get into in more detail in another course or section because that's kind of a specialized type of area. But sorting, it gets kind of messy to sort the projects that are open and the projects that are closed and blah, blah, and so on. So we're not going to get in, but that's the general idea. That's a good specialty area if you want to get into it, but it can get complicated. So I'm going to close this out. Okay, that's the general idea. So this is where we stand right now on the P&L, and this is where we stand on the balance sheet. So if your numbers tie out to these numbers, great. Let's open up the trusty trial balance to see where we're at on it. Easiest way to check the numbers, I believe, going into the reports. I'm just going to type in trusty trial balance, not typing in the trusty part, just trial. I did type in trusty. Don't type the trusty part, just type trial balance. But I like to call it trusty. 010125 tab, 013125 tab, run it to refresh it. Okay, so this is what we have thus far. Balance sheet on top of the income statement. Balance sheet asset accounts, assets starting at the cash, going all the way down to the contra asset of accumulated depreciation. Then the liabilities going from the AP, accounts payable, to the payroll liabilities, then the equity going from opening balance equity down to the owner's equity, equivalent to the retained earnings account, the one that the income statement closes out into, and then the income statement, which now has an extra income account, the billable expense income. 3 income accounts minus the expense accounts would add up or subtract out to the net income on the income statement, which would then close into the equivalent of the retained earnings account, which we have as owner's equity because it's a sole proprietorship if we were to change the range of the dates to 2026. That's going to be the general idea. If your numbers tie out to these numbers, great. If not, try increasing the date range. It's often a range issue to include the current date and see if your numbers change. If they do, click on that changed number, go down to the source document, change the date to somewhere between January 1st and January 31st, see if that fixes the problem. If not, at the end of the first month of data input, we'll run some other reports, transaction detail reports, to try to further drill down on any discrepancies.